Hi, good day to all. This is Kelvin here again. Welcome to this week's latest weekly edition of my weekly technical outlook on the major stock indices. So, as usual, I'll be covering the latest trend bias for this week, as well as key levels to watch on these various major stock indices across the globe: SPX 500, NASDAQ 100, the Hong Kong 50, the Japan 225, as well as the German 30 index. So, before we start, let's take a look at the disclaimer slides first. All right. So before we go into the detailed technical analysis of the various stock indices that I will cover or share with you guys, let's take a look at last week performance. And I added one more table, which is the monthly performance for May. So as you all know that we just ended the dreaded month for May for the US major stock indices because the US is actually closed today, 31st of May, for a public holiday. So their last trading day for the month of May was in fact last Friday. So if you could see across the board for the SPX 500, the NASDAQ 100, the Dow Jones Industrial, and the Russell 2000, not really a kind of a sell in May and go away phenomenon that most of us dreaded for this year. It actually didn't occur at all. So if you look at the SPX 500, 0.5%, which is positive. The one that is only negative so far will be the NASDAQ 100. Okay, whoops, sorry. Yeah, will be the NASDAQ 100. It's actually due to, that kind of underperformance of big tech stock over the value play and cyclical that give rise to what I call this Dow Jones Industrial to actually outperform from a monthly basis. But what I could see on the Nasdaq 100 is actually they actually managed to trim the earlier losses for the month of May. Actually, it's actually closed much smaller at negative 1.26%, which is actually positive as well. So overall, if you look at the last week performance, you could see over here is that the one that is outperforming is the Nasdaq 100, which is really up 2.05% for the last week, 24th of May to 28th of May, which also surpassed its prior week performance at 0.14% and its prior 4-week average at negative 0.96%, which is rather a positive phenomenon on this ongoing underperformance of US big tech stock over cyclical. So what we could see over here is that this underperformance seems to be getting lesser as we head towards the last few weeks of May. All right. So if you look at closer to Asia, will be Hang Seng Index, the Hang Seng Tech. So Hang Seng Index, like I mentioned last week, is that do keep aware of its basing formation, which indeed is actually now showing signs of an upside potential momentum coming into play because of the China stock market start to stabilize, which I highlighted in my Twitter on the CSI 300, bouncing off from the 200-day moving average. And actually last week or the week before, it actually managed to stage a weekly performance that was not seen in the last 1 to 3 months, which is very outstanding in terms of momentum that's coming into the China related stock market. So that's give rise to my I would say that my potential basing formation on the Hang Seng Index, because if you recall the Hang Seng Index as well as the Hang Seng Tech Index, both of them has kind of underperformed against the rest of the world on average since the end of the Chinese Lunar New Year break, somewhere around the third week of February. So right now, upside momentum seems to be coming back into these two markets. So they do keep a close watch on it. Later, I'll share with you on the technical features on the Hang Seng Index or the Hong Kong 50 we call it our platform. So a very strong, outstanding, I would say remarkably robust last week performance, weekly performance at positive 2.34% above its prior week average, which is 1.4%, and also above its prior 4-week average at negative 0.53%. So one thing that it seems to me that also the Nikkei 225 seems to be coming back into a recovery, because if you look at last week, I did mention that yes, it did broke below a kind of a 4 or 5 week symmetrical triangle range support configuration, but it managed to held off at the 200-day moving average and indeed staged a strong rebound. So last week I was actually at the start of last week I didn't actually turn bearish because of that there's some signs of positive elements that the Nikkei 225 is still holding, which is one of them is actually holding at the 200-day moving average, which indeed it actually bounced off from there at 2.4%. So I actually towards on Friday, I actually validate a up move, a potential up move in the coming week for Nikkei 225. Later I'll share with you on the technical chart. So a very strong performance, 2.4%, surpassed its prior week performance at 0.83%, as well as its prior 4-week average at 0.59%. So for the German DAX, what I could see over here is that, okay, bear in mind, the the Hanseng, the Hanseng Tech and the Nikkei 225 and the German DAX, the money performance is based on the current prices that we have right now as at of today. As you all know that the Asia market are still open, hasn't closed yet for the end of the May. Similar for the European index with the German DAX. So based on current we call it prices, what we could see over here is that the German DAX is actually the one that is outperforming among the pack. All right, at currently at 2.54%. So this is not a finalized figure yet because the closing, the trading day, the last trading day for German DAX is still not yet closed, which is today. Okay, they're still trading for today, except that the US market has really closed. I mentioned that because today is a public holiday for them, so their last trading day for the month of May will be on last Friday. All right. So for the German 30 index, weekly performance wise is 0.53, but what I could see is that it's now surpassing the prior week and the prior 4-week average. It slowly churned up to actually make fresh all-time high last week. All right. So overall seems to be pretty positive as well. So now breaking down into the very quickly, I go into the weekly breakdown of the 11 S&P sectors, okay, which make up the S&P 500 index. So last week, top three outperformer will be the communication services plus 2.46, consumer discretionary at plus 2.23%, and real estate plus 2.09%. And one of the bulk of the reason why consumer discretionary outperform is due to the short-term technical bounce that we see on Tesla. So bear in mind that Tesla is actually one of the, I would say the second or the third largest component stock inside consumer discretionary under automobiles. All right, because thanks to Tesla, because of the short-term technical bounce from its 52-week low range support, it actually give rise to this last week outperformance on the consumer discretionary sector. Now, if you stretch it out further to 1 month till 28th of May, which is which is 1 month. So the top performer will still be the cyclicals play, financials, materials, energy, industrial, registering 5%, way above at 0.5, surpassing 0.5% of the S&P 500 index. So if we go ahead for 3 months, what we could see is still pretty much robust outperformance on the cyclical. And what we could see is that the information technology now start posting a positive gain. Okay, this is a running 3 month, okay, at plus 5.82%. So if you go year to date as well, the technology has now also recording a positive gain as well. That was previously from a negative gain we see about 2 or 3 weeks ago. So what we could see is that yes, cyclicals continue to outperform, but information technology, which was hit at the start of the year in Q1, Q2, now start to record some signs of revival, which is actually good for the overall market. Why? Because the US big tech stocks actually comprises a significant percentage in the S&P 500 index, which could actually create a negative feedback loop if they keep on registering negative numbers. All right. Good. So now let's go to the individual technical chart that I'd like to share with you all for this week, and I would say the trend bias and the key levels to watch. So let me very quickly switch to our platform. All right, good. So before we start, right, I'd like to highlight one of the outperforming play, right, that it seems to be taking shape from the tech space will be the semiconductor stocks, which is in short call it SOXX, which is listed on the New York US Stock Exchange, SOXX, long form with iShares PHLX Semiconductor ETF, which comprises the 30 major US semiconductors. All right, so what we could see is that it actually bounces off from a key medium-term pivotal support at 392.50. So yes, even though a couple of weeks ago it did break below this long-term ascending channel support since, or I would say major ascending channel support since the low of 18th of March last year, but I was quite reluctant to turn outright bearish. Why? Because the RSI actually didn't confirm. It's then recall that the RSI actually managed to hold on to the support at 37%. Okay, at this level, and now a couple of 2 weeks ago, it started to bounce off from this support, and now breaking above this 50% mark, as well as the descending resistance, taking from the high here, right? It break out from here. So we could see that medium-term momentum has started to turn very, very positive, and this was actually reflected last week on the price action where it broke above this intermediate resistance 423.60, and also which is actually reintegrate back into the ascending channel support, as you could see from here. So all in all, what we could see now is the chances, the odds now seems to skew towards the bulls rather than the bears. So that's why initially, because of this support that is holding at 39250, even though it break below the ascending channel support, we were reluctant to turn outright bearish at that point in time. So what we could see over here now is a slow trajectory potentially to actually form new higher highs, which is all-time high at 458, which is actually positive in terms of technical configuration on the SOXX, which means it translates to what I call it a revival of infotech that is being led by the semiconductor ETF, all right, which is actually bodes well for the overall market as well, given that semiconductor is actually a key component of a global proxy play. All right. So now going on to the SPX, let's start with the daily chart first. Okay. So on the daily chart, right, we've been highlighting that since the bullish break of this expanding wedge resistance that was in place since September 2018, it actually uh, broke out from it from here since September 2018. Okay, so it was actually resistance in September 2018, broke out, retested it again on the early part of this year, 1st February. And ever since then, it actually did reintegrate back into this dotted pink line, okay, which is the former expanding wedge resistance now turned into a pullback support. So definitely the major support right now will be at this pullback resistance, which is 3760, which also confluence with the 200-day moving average, and as well as the 4th of March swing low. All right, so on the intermediate term or the medium term, we'll be using the 50-day moving average, which was acting at a support in the previous dip that was seen in January, previous dip seen in March, previous dip seen in late March, and the dip seen in the last middle of May, and as well as the 13th of May and the 19th of May. So very clearly that this 50-day moving average is acting like something like a floor to support this major uptrend that is in place since 23rd of March 2020 low. So for me, right, definitely if I look at the price action, it's very hard for us to actually say that, hey, we are now reaching a kind of a major top over here that where the market is about to collapse or at least do a kind of a 1 to 3 weeks of corrective down move. It seems to me that the odds doesn't justify it at this point in time based on the daily chart. And if you look at the RSI is still positive above this corresponding support at this range itself over here. So what it means that medium term upside momentum remains intact. All right. So for this regard, what I did over here is I will actually adjust the key medium term pivotal support to 4050. So what is 4050? 4050 actually correspond very closely to slightly below the 50-day moving average, which is the last swing low of 13th of May and 19th of May that the price action refused to actually go beyond this level and start to shape higher high. All right, can you see higher high, higher low? Okay, so 1450 will be my key medium term pivotal support for this week. So I actually adjusted up slightly. Last week I was at 39.80, so I push it up higher, 40.50. So as long as 40.50 holds, I'm still expect a kind of a potential push up to actually to see potential new highs or new all-time high at 4280 slash 4300 level. Above it should take us higher towards 4330, 4360. All right, on the SPX 500. So now moving on to the NASDAQ. All right, so for NASDAQ, right, what we could see over here is if you could still recall 4040, right? Okay, let's go to the weekly chart first. Okay, so this is my quarterly outlook. So for me, our couple of days, weeks time, I will actually because I revised my outlook for Q3, all right, because you know that Q2 is ending, right? So I'll do my Q3 outlook pretty soon. So for now, right, I still maintain the same. This is neutrality. Still recall that because of this bearish divergence. So what we need over here is 14,040 level. We need to have a weekly close above this level before I could validate a potential up move. So you could see that actually this level is pretty important. So for the week of, okay, if you look at for the week of 11 April, it closed at 40.34. Tested but refused. Then the last couple of weeks or so, 13,914, 13,877, 13,772. So it actually tested 1440 but refused to have a weekly close above it. So definitely this level here is very, very significant, or I call it an inflection level. Once we have a weekly close, right, we could actually indeed be more confident, or actually in terms of probability wise, to actually see a kind of a potential multi-month up move. Okay, this is a weekly chart. So weekly chart, I'm looking at a horizon of a we call it a quarterly kind of outlook. Okay, but unless this level breaks on a weekly basis, that means weekly close above that, I could be more confident in terms of the probability that will skew towards the bull. So for now, right, for this week, right, I will still use 4040 as my key levels to maximum level that I'm expecting for this week potential upside to test. Anything beyond that, I got to have a weekly close above it. So that means i.e. I could not actually validate a further up move unless we have a weekly close of 4040. If you look at the last 4 week of price action since 11 April, it's very significant, and as well previously on the 14th of Feb as well. All right. So for sure, 14,040 level is a key resistance level on the SP NASDAQ 100, where the bulls got to have a weekly close above it to actually be more confident, or in terms of probability to skew towards more of a multi-month up move from here. Okay, so for this week, right, so let's start with the daily chart first. So daily chart, one thing positive is it actually surpassed the 50-day moving average, which is now acting as a support at 13,420. So RSI, nothing major, still pretty bullish from here, bouncing off from the previous corresponding support at the 37, 35 level, now surpassing the 50% neutrality mark. All right, so no signs of a what you call it downside momentum starting to come back into the market, or come back into the Nasdaq 100 index. So for this week, right, what I do is that last week we have a key medium-term pivotal support at this 12,920 level. So I will actually tighten it up to 13,420, which also correspond to the closely the 50-day moving average, more or less. Then as well as this level, this region here, where the price action managed to stage a minor pullback and did a rebound and a recovery at this minor descending resistance, turns the pullback support very closely to 13,420. So using 13,420 as a bullish medium-term pivotal support for this week to maintain my potential upside trajectory, or potential upside push up, to at least in first step test the 14,040 key upside trigger level first. Okay, anything beyond that, I need to have a weekly close in terms of probability to be more we call it in terms of probability to be more confident to actually see potential for the upside from here. All right. Then now, moving on to the Hong Kong, yeah, Hong Kong 50, which is a Hang Seng Index. So we could see that for sure, it's actually forming a kind of basing formation. Last week we highlighted this bullish divergence on the RSI. So right now, yes, late last week tested the upside trigger level right exactly at 29,270, which is what is it? Which is this? Okay, which is this former swing high here in 19th of April, 29th April, as well as this uh, kind of a range top, or a double bottom kind of a neckline resistance that is in place since 12th of March 2021 high. Okay, one, two, three, four, tested 4 times. So today it actually kind of did a pullback from here. So RSI now is actually back to a support level around at the 50% mark as well. So no change. So still expecting this region here as my key medium-term pivotal support, 28,000 slash 27,600, which is the double bottom low. If we start to see a kind of forward close below it, then this whole down bottom scenario will be invalidated. This is where we start to see a further corrective down move to test the next support at 26,650. So all in all, right, it need to have a 4-hour close at least a 4 hour close, because you see, you look at the last few weeks, tested here, 28, they tested as well, but refused to have a 4 hour closer. So we need to have a 4 hour close above 29,270 to reinforce this kind of 1 to 3 weeks of multi up move to at least retest this 30,140, and as well as the 18th of Feb post Chinese New Year lunar year break swing high or swing top at 30,760 slash 31,080 level. All right. So now moving on to another Asia indices will be the Nikkei 225. So if you could recall the Nikkei 225, why last week I'm hesitant to actually turn outright bearish, even though it break below this symmetrical triangle range configuration that is in place since 18th of Feb. So close to about give or take 3 months plus, because of the bounce from here at 29,700, and also of the 200-day 50 move, 200-day moving average. And I want to share with you where this bounce take place. This bounce does 227,500. Okay, even though it's the swing low of this 1st of Feb, it also correspond to a key uh, Fibonacci retracement level taken from the low of March, which is the start of this ongoing major uptrend or major uptrend phase. If you draw from here, okay, let me highlight to you again. Oops. Okay, it's close to the 23.6% as well. All right. Okay, so in terms of Fibonacci retracement or the factor approach, for a major uptrend, if the 23.6 Fibonacci level managed to hold and stage a bounce off from it, very hard for us to actually say that this major uptrend has been destroyed or invalidated. And if you look at the way it formed, the way it bounced, it actually formed a dragonfly doji at the end of the day, which is a bullish reversal candlestick. So there's a lot of positive elements at that point in time to actually not justify for a corrective down move from here, if even though it break below the symmetrical triangle range support. All right, so now where we are now, it actually now surpassed back into the symmetrical range support, which is positive. All right, so what we could see that this movement over here is considered as noise. All right, it's indeed a noise, a very noisy breakout that I kind of washed off initial buyers earlier on, but managed to stage a reversal back up above it, which is positive in terms of sentiment. And if you look at the RSI also managed to also surpass. If I link up the RSI, which correspond to these lower highs that form on the symmetrical range over here, this descending resistance price section depicted in the gray line. Okay, if I plot it, very similar. So this is the kind of barrel resistance on the RSI. So on the barrel resistance on the RSI, the RSI has reached stage bullish breakout. So indicating to us, right, because RSI measures rate of change or considered as speed or momentum. So momentum has started to turn positive on the medium term by this bullish breakout on the RSI resistance. So what it means that in price action wise, price action is actually potentially also may shape a bullish breakout from the price action resistance as well, because momentum, a leading element or a leading kind of indicator of price action, has already staged a bullish breakout ahead of time. All right, so this is how we use RSI in conjunction with price action resistance, indicating to us, yes, there's a probability of a potential bullish breakout from here. So for because of this, right, so that's why late on Friday, because ever since they start to reintegrate back above the the former symmetrical triangle range support, I actually validated a potential up move for the week. So what I did over here is that I turned bullish again on the 4 hour chart. So I posted it on my Twitter platform, on my Twitter, yeah, my Twitter handle. So I tidy up the support a bit. So using 28,300 for this week, okay, as my key minimum pivotal support. So as long as this level holds, that means there's no 4 hour close below it level. Okay, therefore we could potentially see a potential push up to actually test 29,600 first, which is the swing high in this area, and as well as the descending range resistance or the descending symmetrical triangle resistance. A break above it should take us up towards 30,000 to 30,230 level, which is the upper boundary of this this ascending channel that has started to evolve since 13th of May low, and as well as the previously swing high of 25th of Feb, 19th of March, pardon me, 18th of March, and as well as 6th of April that the price actually refused to break above. And right now, if I were to draw for your a Fibo extension from the low of 13th of March, from here you could see it correspond to the 2 times level as well. Right, so pretty significant in terms of resistance at this level. So for this coming week, that's why maximum we're talking about the medium term outlook. We are looking forward towards this level, 29,600 first, then thereafter 30,000 to 30 in a we call it in step-by-step play. All right. Now, German 30, okay, the German 30 or the DAX. So same thing. Last week it formed a new high. Okay, so let me share where's the new high. So at 15,605. Okay, 15,605, which is also correspond very closely to our first intermediate target that we have, 15,580. So what we could see over here, it could be churning in a kind of a ascending triangle formation. With my ascending triangle, a bit similar highs, okay, but higher low. Okay, higher low. So what I could see over here is that it's churning in a bullish continuation, potentially configuration because of the higher low, and keep on holding on above the 50-day moving average that is in place since 5th of March. All right. So every time it tests the low of 5th of March, price rebound, tested again on the low of 13th of March, 13th of May, rebounded, tested again on 19th of May, rebounded. All right. RSI, nothing scary, still holding above its key corresponding resistance at the 42% level. Price action wise, ascending triangle is more or less a bullish continuation pattern rather than a topish pattern. So in terms of odds rise, it's very hard for us to say that hey, the DAX, even though it's at a all-time high, even though it didn't clear above the it didn't clear above the 15,580, then start to go sideways, and last week performance was kind of minute at 0.55%. But we can't say that it's the start of a potential major top or even a medium topish formation yet. Okay, not much evidence to say that at this point in time. So I will still maintain that bullish bias that I have for last week. Okay, no change using 14,800 will be still my key pivotal support. Intermediate resistance will now be at 15,060. So what's 15,060 is the 50-day moving average, and as well as the ascending channel support, the minor ascending channel support that is in place from first Feb low. Okay, first Feb low from here. So what we could see over here is that still looking for a potential push up to actually test another all-time high. If a break above 15,580, that means a clear kind of a 4-hour close above it. We could see further step of a push up in this impulsive structure to actually test the first resistance at 16,000, the next resistance, pardon me, at 16,070 level mark. All right, provided that 14,800 is not broken down on the downside. There is no 4-hour close below 14,800 level. So all in all, what we could see is that the no kind of a sell in May and go away phenomenon for the US stock market, and also on the Asian market in general as well, because Asian market and European market we still have one more trading day to go, but so far the monthly performance has been positive except for the Hang Seng Tech Index. Okay, but Hang Seng Tech Index also later I'll share. Hang Seng Tech Index is actually pretty positive because at this moment in time they managed to close off the lows from the month. Okay, which is positive, right? So even though it's still a negative return for the month of May. Okay, so overall, I'm still expecting further kind of a potential upside technically from the major for the major indices that I share with you all in this video. So with that, have a great trading week ahead, and I'll see you all next in my next video pretty soon. Thank you.